Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. I am delighted that we have Doug, the Everyday Guy DeRosa, back, who's been on vacation hiatus, but he's back again. He's happy. Look at him. He's happy to be back.
Well, 1 month from today, it's college football season. So I know you knew that. That's why I'm rocking the Clemson hat today. So
I like the Clemson hat on you.
Thank you.
And we're also joined by Trade the Chain's Director of Research, Nick Mancini, from his new home on the West Coast. So, and it's birthday week. Yes, it was his birthday. I know we said we weren't going to do an episode today, but we are. I think next Wednesday, moving forward, we're not going to do episodes because of the Trade the Chain AMAs, member AMAs that we do. Which, by the way, I see Eric M's comments in the chat. Geez, I'm going to change my name to Bob. I know who he's referring to when it comes to the other Alex.
You need to be Alejandro. You need to be
Alejandro.
Alejandro Mascioli. There you go.
Yeah. And the other one was an Alex M. Also. So that's
So, thanks, Doug. I knew that, but I was just holding back from saying it publicly.
Oh,
I appreciate it. Eric, next week's AMA for our members, actually, we're going to go over tutorials for how the platform and dashboards work, as well as we just launched the new website, all the looks and feels of it yesterday, and there will be an Academy section up as well for the tutorials and stuff like that in real life use cases that Nick, myself, and the others on the team use every day to pay the rent. With that being said,
hold on real quick though, just to answer part of the question though, like in our community, we don't give trade setups, but we give daily analysis. We cover sentiment, we cover technicals, we cover fundamentals. Typically give our opinion in which direction things are going to go, and then we typically give core levels in relation to various price actions. So never it's going to do this, it's going to do that, but here's the setups in both directions. Here's where I feel, and here's where I may place a trade given certain conditions. So we do go very in depth in reference to all of the data and where we feel things are headed, but we never ever tell people where to put their money or exactly how to make their decision. So we try to give everyone the best information possible.
Yeah, I'm going to call Nick has a new name. If Doug is the Everyday Guy DeRosa, Nick is the fine print Mancini. And when we are in the community, one of the, to Nick's point, just disclosure, we don't do that, but we do talk about it. It's real time, the channels with our members and us. So we're 24/7, usually displaying all our entries and exits and what's going on and what we're doing. I've actually made quite some decent cash off of our members. So that's, a lot of smart folks in there. And it's 23 time zones our members reside in, so it's around the world 24 hours a day.
And I love it when we're like, oh, this trade idea looks good, but I don't think we're gonna take it because it's risky. And then someone pops in and is like, I'm 20x long, and they and they kill the trade. And Alex and I are sitting back like, wait, why don't we take the trade? And it was that exactly. Happens more often than you think. It's very funny.
But it really is good. I mean, if you're thinking about it, it's a 14-day money back guarantee. But if you need to think about it even more than that, at least sign up for the newsletter, because that once a week newsletter is a very in-depth analysis put out by Nick and the team, and literally that it's free. And that alone can change your direction on a week-over-week basis. But thank you for the inquiry, Eric. Really appreciate it, man. Let's see. Where are we today? Let's go into the markets. Hump day. I'm so happy it's hump day. Here we go, folks. Total market cap for crypto, $1.09 trillion. We're up about 100,000 from yesterday's video. Bitcoin at 23,435, up just under 1% in the last 24 hours. with Bitcoin daily sentiment 57 out of 100. Ethereum at 1659, up about a half a point in the last 24 hours. A little bearish neutral stance at 47 over 100. The hottest on the socials there, you got Seller Network leading the way at up price-wise 3.64%, but a 408% jump in social media activity. We have ApeCoin. ApeCoin was mentioned by Gucci yesterday or the day before yesterday as one of their acceptance forms of payment. And everybody kind of ran with that. And I just want to clarify, even though Gucci put that tweet out, they deleted it and then put it out again. It wasn't really about Gucci accepting ApeCoin specifically for payment, although that was a great tweet. They took on a payment processor that in where they can accept a lot of different cryptos, but they singled out ApeCoin for the publicity. So it was a good stunt by them. And then we do have Sol on there, Solana. Obviously, we're going to cover the news of the exploit wallet hacks and what's going going over there, not up or down, over there. But you can see Sol only down 4%. I want to just give the reasoning for that and make sure everybody has clarity. The hack had nothing to do with an exploit in Solana itself. There seems to be a little bit of confusion running around, and I get it. But it wasn't a exploit in Solana. There was no flaw in the Solana chain. It had to do with an exploit of Solana wallets, and not even particular to Solana. There was one, but there's also another wallet involved that carries different other kinds of coins as well. Sushi jumping up 5.5%. Let's see, top price gainers, GNY still up there, although it has a bearish daily sentiment now, but it's up 27%. VET at the bottom of that list up just under 10% with a 68 bullish score. Most bullish coins on the day, we got Sushi, Ape, Algo, Win, XHV. And the most bearish coins on the day due to sentiment are leading the pack is Sol with an 8 score. And that's just because of the negative news. So sentiment on Sol, again, down on the negative news, not because this hack was directly related to their blockchain. Looking over at the CoinScope, and you could tell I was doing a little research on the Sol charts.
Yeah, eight daily sentiment right now. It's crazy.
Yeah, 8's pretty low. We don't see many of them hit 8 unless your name is Luna. Looking at the charts, we can see on the 1 hour change, everybody's pretty much neutral. Any of that red is only down slightly, and it would have actually been up about an hour ago. So we're a pretty lateral day overall. And then just before we get to the news, here's the Solana sentiment, what it looks like. You see a deep dive in sentiment, but you see price rebounding off of that once everybody learned it wasn't actually on their chain. So that being said, Nick, let's take it away, man. Let's hit them charts.
Yes, sir. So so obviously we'll definitely talk about Sol in a second, but I think the main chart that everyone is really focused on is S&P future, well, the S&P and the NASDAQ, but we are currently looking at S&P futures. And as you can see, it's it's quite a snake chain of green candles there. So starting to get the little little T-Rex, little dinosaur formation here, which can really signal one of two things. It's either consolidation or continuation. And I think many in the bullish camp want to see this 4,200 level struck. That's been it's been a big target amongst bulls in the S&P category. And we're very flush with buy volume, but it's interesting. Once we start getting to these levels is when it starts getting, the trickiest to make money. So this is when people will start shorting. It's a potential for a squeeze. It's, potential for a large sell-off. So this is when things start getting risky and hairy. But I think the most interesting part about this is the fact of how Bitcoin is reacting in the same fashion or a bit of lack thereof. Obviously, more or less kind of the same formation, but given the S&P breaking highs and breaking, trying to break out of this consolidation. Very odd to see Bitcoin not reacting similarly in the context of the wider trading that happened, in mid-July up to early August. So if we're correlated, but the S&P is breaking higher and Bitcoin is still stuck in its current range, that to me, even though the percentages may be different on Bitcoin having a higher beta compared to the S&P, it still shows that Bitcoin is a bit weak compared to equities. And that's something to take note of, especially in relation to if you are an equities bear or believe that equities are going to trail off soon. It certainly, piques your interest, the fact that Bitcoin is weak in the face of a strong equities move. And it may give reason to suspect a potentially worse move from Bitcoin in relation to equities. Now, we're seeing very similar on Ethereum as well. And I believe that, more or less Ethereum will follow what Bitcoin and the S&P end up doing. And so if you watch the daily show, I'm not going to outline every single thing here because we do find that we do think that you should tune in and watch that and take the value from it. But if we continue, if the S&P does pipe higher, I think 1700 is a very solid target. And of course, if the S&P breaks off, then I think 1600 or lower is a potentially good target. And given the weakness, I would not be shocked if we do see S&P weakness, which is likely at some point in the future, that we don't see, potentially worsening conditions for crypto in relation to their previous ranges, which would mean Ethereum starting to really come off these highs, tag that $1,500 number, see Bitcoin come off these highs, tag that 2,200 or 22K number potentially lower. But potentially in the next 24 hours, it is important to consider that we may either just continue to consolidate in this range. And I think a lot of the market is going to be waiting for how the S&P continues to react between 4,150 and 4,200. It does seem like it wants to go ahead and crab up there. But to me, eventually this is gonna fall out. These things never last forever, and if we kind of go back in history, there is the potential for just some straight up consolidation to occur. But we have Fed governors saying things like this. We have Fed governors saying yesterday inflation has not come down in their view. So we're starting to hear a bit more of a hawkish tone from the Fed, and one has to wonder at what point are the markets going to price this in, or do they truly believe that the Fed is going to continue to keep the course steady and not take any further action? So that's kind of where we're at right now.
Can you go back to the Twitter, please? Go back to that tweet. I just want to know what's going on with the tweet below it. Did he say higher? And then the guy singing "Girl, we couldn't get much higher." I was distracted by that while you were talking. I apologize.
Yeah, it is very distracting, not gonna lie. And by a blue check, no lie. So but yeah, so it's interesting, and we talked about this, Alex, previously, is the fact that so let's go ahead and keep the S&P here, is the fact that right now, given the information gap, there is a bullish narrative, right? Federal funds rate 3.5%, inflation topping. That was spoken by Jerome Powell. We're hearing a bit of a different take from not one, but multiple Fed governors. And clearly the market doesn't care because, literally we just had, 3, 4, 5, solid hawkish comments earlier today. But my trader friends, my macro friends continue to remind me, and this is something that is unquantifiable. We are in a clown market. We are in an absolute topsy-turvy, irrational clown market. And both equities and crypto. So, no matter what you think is rational, it does seem that irrationality is going to win at the end of the day. And that's the most frustrating thing to anyone who actually takes a logical, analytical approach. It's tough to believe with Fed governors saying that the Fed is that with what we've talked about and foreseen coming, that the federal funds rate is not going to be higher than what it is currently predicted to be by the end of the year.
Well, I want to do this. I actually see Lucas Bradley in the chats here, but I want to go to his Twitter because I caught this, which was said by a Fed governor. I don't feel it's San Francisco Fed President Mary Daly. Actually, I don't feel the pain of inflation anymore. I see prices rising, but I have enough. I sometimes balk at the price of things, but I don't find myself in a space where I have to make trade-offs because I have enough, and many Americans have enough. I would like to wholeheartedly disagree with this person's statement.
Totally. Tone deaf.
Completely tone deaf. And what I want to ask you, Nick, is, and I put your charts back up. What I want to ask you, Nick, is this possibly a consensus among the Fed that they're out of touch, or?
I mean, they're all rich. Anybody who's that wealthy, they don't. I mean, it's the classic. If anybody who's watched Arrested Development, there's a famous line from Lucille Bluth going like, "How much could a gallon of milk be?" She's like, $20, and everybody's like, "What?" Like when was the last time you were in a grocery store? Like when was the last time you bought a consumer good that related to the great populace of the United States? And so I feel like anybody who's saying that has no earthly idea. They have no connection to someone who is going through it or has able. They don't buy consumer staples like we buy consumer staples. So it's, but regardless of if the Fed is out of touch or not, it's, they're going to do what is best for the economy in the long term. And what's best for the economy in the long term is never ever good for the lower to middle class ever. I mean, look at where our volume system is compared to the start of the lower middle class. It's complete shit. So that the way the economy works is inflation is supposed to be slow enough so that you do not feel the worsening of your value situation over time. It's supposed to be so gradual that you literally you feel that you can't do anything about it. It's the whole point of the damn system. Now that it's exacerbated, everybody's yelling and screaming and rebelling. So the Fed is going to get it under control, but it may, I'm the opinion that they have not brought forth the pain that has to be done to make sure that we don't exacerbate the current pain we're feeling in the future. And I know that's super weird to say. It's either you continue to hurt this bad forever, or you get hurt really bad for 6 to 12 months so that you can go back to the land of opportunity that we had for the past decade.
And Nick, going back to the correlation, because equities and crypto have been so highly correlated, and that's separating itself a little bit right now, at least over the last week. If we do head lower in crypto, do equities need to come back in line, so to speak, in the mean to drive crypto lower, or can that go lower in and of itself, given the news cycle now has gotten a little bit crappy over the last couple of days or so?
I mean, I still think they're going to move more or less in lockstep. Like there's no true correlation, but you can still see the peaks and the troughs and general movements are the same. And like I said, just based on how weak crypto looks right now, and also just like, so I mean, just think about it though. When opportunity does present itself, are you going to buy? I understand that crypto presents more opportunity. There's more risk, but the intelligent investor, the one that's going to end up increasing prices long term, meaning institutional big money, what are they going to buy first? A company with profits and dividends and legitimate progress to show, or are they going to buy Bitcoin and Ethereum and random coins with potentially some good promise, but not really producing anything of value? Like, what's the first bucket they're going to go into? My choice is equities. So I have a feeling that crypto is going to continue to be weaker in comparison to equities, and that any equities sell-off is going to be felt a little bit harder in crypto because crypto is going to have a higher beta, which is basically beta means how much it moves in comparison to another asset. So
sorry, I'm reading Crypto Man in the comments. I was gonna butt in at some point and complain about the $14.99 a pound, but then the Steelers trade, I mean,
Jimmy G's not that bad, to be honest, but continue.
I mean, I'm a Steelers fan, so I would actually not. Where we're at now, I don't want Jimmy G. Screw Jimmy G. But in relation to equities, like crypto is likely to continue to have a high beta compared to equities. Equities are going to be more desirable when the time comes. And therefore, I think we're going to see continued weakness in comparison. We're going to see continued weakness in crypto in comparison to equities. Therefore, any equity sell-off will be exacerbated in crypto, and any equities buyouts will be felt less in terms of crypto. But crypto will still continue to be more volatile.
All right, let's. What did we go over the BTC chart already?
Mm-hmm. Where you been, bro? You've been thinking about barbecue.
I was thinking about, my wife just paid like $6 for a head of broccoli. I think that's a ripoff.
Look at this. This is crazy.
Yeah, and about $6 for cauliflower too.
And what clown world? I mean, we are living in a clown world. And what clown world does multiple Fed governors believe this? And this is what comes of it.
Wait, hold on. Let me get the. Put that back up. Where were we?
And what clown world do multiple Fed governors believe this? Which I think most people will continue to believe, because I mean, you and I and us three on here are pretty everyday people, as well as experts in the markets, and we kind of see this, and the charts react like this. Like, I get it's not Jerome Powell saying that, but it's not just one Fed governor saying that either. It's just I'm a bit flabbergasted. I'm going to continue to keep my bias, because we are way too high with this kind of narrative or this kind of speak happening for me to continue to think that continued bullishness is going to occur. But of course it is going. I mean, it's going to be interesting to see what further signal that we hear, from other Fed governors. Does Jerome Powell pop in and drop another Wall Street Journal article in a couple of weeks? We have unemployment on Friday too. So if unemployment's, and it's like, and Adam Cochran wrote a great thread recently on Twitter, and was like, if bad news is good news bad news? Like, if unemployment's good, doesn't that mean the Fed has to do more?
I think I gotta be, so everything is, we've gone through particularly unique time in the last 2+ years, 2.5 years now with the COVID situation. I think employment numbers are going to beat expectations. We're in an interesting time with our labor force and our employment. Do you know that there's actually there's a lot of jobs out there? There's more jobs available than there are people to actually fill them. The trouble is the optics of the job. So the majority of jobs are actually non-degree requiring jobs that are out there. And not saying that they're not good wage jobs, but from somebody's perspective who's gone to university or college, they may not want to. There's a story out. Did you see this story out, guys, about the guy who left his job to go work at Walmart as a manager because he's getting paid more? He left his job as a teacher. I mean, that
doesn't shock me.
No, it doesn't shock me at all either. That's the kind of crap that's going on. I mean, you go work at McDonald's as a store manager, you make $80,000-$90,000 a year.
Definitely
at some
more than a teacher, yeah.
Yeah.
Unfortunately.
It's more than I make mowing lawns on the weekend. So, Doug, what are we feeling here? I see, for me, gas has gone down from $1.50 a liter to about $2.22 a liter, and so for me, that's a big change. With fuel prices dropping, we're midsummer. I'm thinking about whipping out my, my vacation car that gets 8 miles to the gallon, taking it down the road. But as we feel softer on prices, are we going to feel that across the way? What are people's everyday lives going to be like? Because right now, I'll be honest with you too, Doug, it's actually a bit cheaper for me to eat my meals out than it is to make them at home right now.
Well, like we just discussed, being tone deaf, this is some data that came out over the last day or two. So 13% year over year increase in credit card balances. Now, balances were paid down because of stimulus. Obviously, everybody's getting that stimmy money, increasing cash balances. Shocker, their bills are higher now. What's happening? Credit card balance. That was the largest jump in 20 years. But again, that person out of San Francisco, hey, everything's awesome. Total household debt is $2 trillion higher than the start of the pandemic. The worst amount of record debt ever for from 30-year-olds to 59-year-olds just occurred, right? So we're seeing some pockets of pain, so to speak, right? And you mentioned this before, Alex, with auto loans, some areas like that, we are starting to see that develop, right? So to Nick's point, what is inflation? We're debating this back and forth. Clearly, people are seeing that, right? If they're not putting credit card balances on for no reason. So we are starting to see the pain there, and that's showing up obviously in credit card balances. We also have had the real estate market, which has not necessarily had a dramatic rollover, but we saw 15% of all contracts in June were canceled. That was just 11.7% a year ago. So now we're seeing.
I think we had like the highest percentage of reductions ever in history too.
It was ever in history. And the side note on that, I mean, I'm sure you guys do too when you're bored and sitting on the rocking chair in the front porch. But I like to check the local real estate around me, and I think we hit a really big peak point in real estate in my neighborhood about 4 months ago. I look now. Matter of fact, I was looking with a couple of friends the other day on Zillow, and prices between like $1.5 to $4 million slashed 30%.
Well, what's interesting about that is, the 10-year for the most part, mortgage rates are correlated for the most part to the 10-year. So the 10-year was around 349, and that's gone down to recently almost 250, right? So mortgage rates have gone down, but the demand side has not picked up. And why is that? Again, to this point, being tone deaf. People don't feel good right now. Now, obviously, those who have money will always feel good, but there's a majority of people out there that don't feel good about their job, that are not going out and buying big things like a house. They're starting to accumulate some housing debt. I think the last part of the domino, so to speak, is that in real estate, there's so much tremendous home equity value still left. If people start tapping into their house with equity lines of credit, usually they do that to, buy pools and vacations. But if they start tapping in to pay for their loans, that's a really bad sign, right? Because you don't want people tapping into that last piece of equity. So, yeah, I agree with Nick that the economy is, as we discussed, is different than the markets. The markets are kind of going in a little bit of their own direction right now, but the Fed is going to continue to raise. Things are not great, and things will be hopefully getting better at some point, but that's not going to happen in the next month or two.
No, I totally agree. I also want to just put in a note here because you mentioned, just people every day, unemployment, all this stuff. There was once a time when the three of us had employers. I remember that time. And the reason it clicked with me is because, we're 2 months away from our 2-year anniversary at Trade the Chain from when we started it. And yeah, see Doug's surprised. He's like, wow, I'm old.
We used to be able to afford an ice cream cake, but now it's probably just going to be like one little ice cream bowl because the economy is so bad.
I was for Phoenix, for the auto loan market is just it's gonna collapse. I mean, that's impending doom right there. But this is an entrepreneurial company. I remember we came together. I was head of institutional crypto at Bquant. My colleague was Doug, sitting next to me on the desk there. Nick, I met, I think it's going on 3-4 years now. I don't know how long ago I met you.
We sat next to each other at we spoke on a panel, and I read your weekly newsletter for God knows how long, and I was like, oh shit, I'm sitting next to that guy. And then we had dinner, and yeah, it was a fun night.
And it took 2 years from that. When I called you up, you were at Oracle or something. You were at Oracle, and I said, "Hey Nick, I need a new research guy," and a deal was born. And but it's all about this is all entrepreneurial. We have jobs today. We're on YouTube right now and doing our daily stuff, our daily day-to-day stuff in Discord with our members. Because we created it ourselves. We're very fortunate. We're really lucky. We work, probably twice as hard as a 9-to-5 job, but we work on our own terms. And I think entrepreneurship is it's a big fabric of the United States. It's a big fabric of the world in general. And for me, that's almost like my personal way of getting back at the man, is being an entrepreneur, because when it works, it's like nobody can hold you down except for yourself. So we're lucky.
Agreed.
But I don't want to digress. I don't want to make people get teary-eyed and stuff. So I'm going to
we've got a market to short.
Thank you very much, Crypto Man. I appreciate it very much. We always do. I want to go real quick to the news that we promised because of the title, and that would be the Solana hack. So it really is a Solana wallet hack. I went to bed early last night, but when I woke up this morning, which was about 3 a.m., I saw all the chatter on Twitter, and I saw the chatter in our TTC company chat. At first, I was surprised. I was like, "Oh crap! There goes Solana." But then, as we got to read more about it, news stories kept up with it, and hopefully, we get a post-mortem debrief of what's gone on. It turns out it's actually just a wallet flaw. It's an exploit in the wallet, not in the chain itself. So, about $4.5 to $5 million has been stolen thus far. And the exploit is believed to be software in certain wallets, mainly in Slope. Second, I believe, is in Phantom. Hardware wallets have not been affected, but also I saw Trust Wallet was on there as well. People were being warned to regenerate seed phrases, not use the same ones over again, which is a very smart move. And the reason I wanted to bring this up, because not only because it's the third day, the third hack or whatever that's going on, it's like the summer of hacks, is the fact that we had a really big breakdown in trust on CeFi platforms, including all of us up here on the panel, including a lot of people who watch us. And if you go back to the first comment on this show, it was called out by Eric. To have your hot wallets exploited like that and money taken out, I feel sorry for those folks. But it really is so important to have a hardware wallet. I personally use a ledger. I use a couple of different ledgers. And then some people use Trezors. Trezors are good as well. I think Doug uses what's the brother of Litecoin?
He's an Abacus, actually, old school, an Abacus. Yeah, I was gonna say
Bobby
Ledger.
Bobby Lee's hardware wallet.
Doug has paper wallets that he has stashed in a shoebox.
But Ledger is Ledger is raising 100 million, I think, because they're so overwhelmed with demand right now. So, and they just did a raise recently. So yeah, they're killing it right now.
That team is so smart. When Doug and I were on the institutional side, we did a lot of powwows with the Ledger team, CEO and their guys over there, and it was really I really impressed by them. I can't stress the importance to have a hardware wallet, everybody. If you don't have one now, just order one. Hot tip: only order one directly from the manufacturer's website. So go to Ledger's website, order from them. Do not buy one secondhand. It could be resealed. Somebody may have the private keys to it already and activate it. Order it directly from the manufacturers. Learn how to set it up. I know that Rob over at Digital Asset News has danteachescrypto.com, which is free. He has a bunch of tutorial videos. Nick and I actually should do a tutorial video on it as well and put it up in our Academy section. It is the most important thing in the world, because if you hear about an exploit as it's happening, you need to be able to whip out a hardware wallet if you want to save what's left on it to protect it and know how to do it within minutes. Order a hardware wallet. I would suggest Ledger, Trezor. That's the two that have been around the longest and have really heightened security on it. Any thoughts on that, Nick or Doug?
No, I agree with you. So I mean, I have some updated information that's still alleged, but it's beginning to become more concrete in relation to the wallets that were compromised. But the the only ways to protect yourself in this scenario were to go to a centralized exchange or to have a hardware wallet. So I think there was also a scenario where if you were completely cut off from the internet, meaning it was you just kind of had a brick, that it was plausible that you were safe. But yeah, hardware is the common denominator for safety, because nobody's breaking it. It's the Fort Knox of wallets, literally, you know. So I completely agree with that. But on the topic of the Solana hack itself, we're getting reports that this is from one of the original reporters of the hack. Oh God, I just lost it.
What do you remember?
So in relation to, this is quote unquote from the tweet. This was tweeted about an hour ago. Looks like the Slope wallet sent plain text seed phrases to external integration partners. So somehow someone or something within Slope, which is a Solana wallet, sent plain text seed phrases, so unencrypted seed phrases, to quote unquote integration partners. We don't know who that is at this point, but compromised Phantom wallets came from seed phrase imports used in Slope. So meaning shared seed phrases across wallets. Compromised ETH wallets were also from seed phrase reuse, not a blockchain or randomness issue, which, if in this case, you know, goes to show that people need to do a better job of inspecting data sharing or privacy and things related to seed phrases and other important information within the application. Because if Slope wasn't encrypting seed phrases, what's the point?
Yeah.
And also it's not a Solana issue, is what it seems. Is it's not a blockchain.
I don't want FUD around the company, right? You know, I mean, they don't deserve it.
So this is the update, obviously unconfirmed, but you know, inching closer to the truth.
Phoenix, absolutely correct. Do not store your Cedar private keys for your wallet on anything electronic. Print them out, write them down, put them in a safe at home, put them in a safety deposit box at the bank. I mean, we always joke here in Puerto Rico that you would make more money off of getting people's seed phrases if you robbed a bank here than you would out of the money in the bank, which is probably true. But yeah, absolutely don't store anything. As a matter of fact, when you get to a certain level, and you know, this is what I personally done, and a lot of people in the industry do. You actually get a laptop, one that you only use for your hardware wallet, and it doesn't have to be an expensive laptop, because all you're doing is literally making sure when the hardware wallet is not air gapped, meaning that there's no internet running to it, which happens when you plug it into a computer in order to utilize it. You have a computer that's dedicated to it, right? So let's just say you have $100,000. Is it not worth it to buy $1,000 computer or a $600 computer, a laptop that does nothing but you plug your wallet into? Absolutely. Because every time you go on the internet, you don't know what exploits you're going to get going into browser plugins, or it's one wrong move and you're screwed. You open up that phishing email, click that link, everything's gone the next time you plug in your hardware wallet. So I have a laptop that's never seen the light of day except for the plug-in from the ledgers. Anyway, I'm sorry I'm rambling on, but this is just so important.
It's safe, it's security and safety. I mean, it's literally crazy. I mean, you wake up, you haven't done a single thing wrong. You know, you haven't, and your wallet was potentially drained. You know, so we have to be much more safe. I think I saw a tweet. I think since 2020, there's been like $30 to $40 billion in hacked and stolen funds.
Oh, that's who's making all the money.
Which that's a lot. $40 billion. I mean, like I worked for Deutsche Bank when the largest fine was ever levied on a bank, which I think was $7 to $9 billion. So in one sitting, and then in 2 years, $40 billion has been stolen within the crypto market.
I mean, I should have stayed in school, like my mom said, and learned computer science, and I could have made money hacking. I don't know. That's the only people making money in the bear market right now, besides you know, us at Trade the Chain. But speaking of which, I'm still short. I'm still in that short position.
Yeah, I did
short Solana on the news.
S&P is coming off. I mean, it may crank back higher, but you know, I'm going to maintain a small low leverage short, and if we end up getting stopped out, we end up getting stopped out, and we have to enter higher, or we take a break. You know, there's no shame in a losing trade and recalculating your bias and your interest, but for right now, you know, we're still moving in a pretty tight range, and crypto is not showing any strength that I would want to see from the S&P gaining the percentages that it did today. So it's very interesting.
Yeah, one of the things that Nick and I are going to do as well, which is something that was requested by a couple of viewers as well as a couple of members, is we're going to do a tutorial on Didex, which is the main DeFi exchange that us over here at Trade the Chain utilize for our long and short positions. So look for that. I think actually, Nick, next week we're like recording a ton of videos actually for the Academy. I saw that in my calendar thanks to you. So this is going to be one of them. And we'll do. I know Neville, you've asked for it, man. I said I'd do it. So Nick is very competent when it comes to this. We all just look at him. But that's about it. This is starting to turn into a Joe Rogan 3-hour episode. So I'm just
you guys ever tried DMT? I mean, that's one of the more famous like Joe Rogan like quotes is like he's just like, hey Jamie, like turn this on, and then it's like, you ever tried DMT before? And the guest is like, what? Like what kind of question is that? Honestly, go like Google if you're really bored and you really need a good laugh, like go look up just like funny Joe Rogan podcast moments, because it's honestly pretty hilarious. Like he's like, there's another famous podcast host, I think on like Shade 45 or one of those Sirius XM, and he just like, I think it's Charlemagne the God is his name, and he just asked the most outlandish questions like straight up, and it's you just like, you couldn't even imagine, you know, someone asking you these questions. So I can't even, they're too NSFW to even talk about on our stream. So I just recommend Google Joe Rogan like funny moments, and then Google main like Charlemagne the God funny moments, and that'll fill up a good 30 to 60 minutes of your day if you're bored waiting for a trade to come to fruition.
You know what's really interesting? I like Joe Rogan a lot. I respect him as a person because if you ever know his story, he talk about entrepreneurship. I mean, and hustle. Try to Google that. I think there's a couple of YouTube videos that chronicle his hustle through his career. But the guy started on that journey as a person who should never be where he is now at all, and has had many twists and turns and always forced the positive in life. So I give that man a lot of respect. He deserves everything that he gets. That's good and positive. So
shout out Fear Factor.
Fear Factor, it actually was a pivotal thing in his life story as far as career wise.
It was a great show. Like I like 2000s reality TV was just, that was the peak of cruddy TV. Like there is nothing more entertaining than 2000 to 2005 like reality TV. Just chef's
he
kiss.
He said he went on that show as a, like, he did it jokingly, not taking the job seriously, because he was absolutely sure it was going to be canceled after a couple episodes. And I think the fact that he didn't take himself too seriously on it and was himself is why they
he was funny. He was amusing, and he was at half the time he was like, I can't even believe I'm presenting someone who is going to eat this. Like, it's like, he was just like, no, honestly, I might go back and rewatch that just for some nostalgia. That was a great show.
I saw a clip where there was this really attractive blonde. She was eating like cockroaches or something, man. I don't think she's ever kissed a guy since. But the other thing I want to say is we're testing our spaces tomorrow. So we have a new social outreach schedule that's going into play next week, and includes Tuesday and Thursday Twitter Spaces, 1 hour long cocktail hours from 4:30 to 5:30, and then also Wednesday we're doing a Discord member only cocktail hour from 4:30 to 5:30 as well. So show your support. If you don't follow Nick or I on Twitter, do so you could see the alert when it happens. If not, we won't hold it against you. We're just nervous. We want people to show up. I don't want to talk to Nick for an hour alone. So that's it. All right. We bored everybody enough. Guys, thank you very much for joining us today. We really appreciate it. Always smash the like if you can on your way out the door. Don't forget to go over to the Trade the Chain YouTube channel as well and subscribe there so you get alerted when Nick does his Monday through Friday daily. It's only 15 minutes. If you don't like sitting through our garbage here, those 15 minutes are boom, 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 boom. It's everything you need to know for the day. It's actionable. And it's a lot of the same information that goes into our member community as well. A lot of alpha has been derived of it. So take a look at that. Guys, thank you. We'll see you tomorrow and enjoy the rest of your day.